good morning, good evening, good afternoon, traders all around the world. This is FXPassion, broadcasting you live on YouTube. This is Forex Training for Beginners. And today's topic is bullish candlestick formations. So, Melbourne, hello, 2 a.m., Singapore, hello, 11 p.m., Madrid, hello, 4 p.m., Miguel, if you are there, I send you a message on Skype. I won't be able to talk to you today, but we can talk tomorrow, 5 p.m. Madrid time. I mean 5 p.m. Spain time, okay? New York and Toronto, Canada, 10 a.m. and London, England, 3 p.m. GMT. Okay, our goal for you is to become consistently profitable, minimum 3 months, knowing when, how and why you make and or lose money. You should not be allowed to trade with real money until you reach the goal. What is the goal? To become consistently profitable. If you are not going to listen to us, here is the risk disclaimer. Don't trade with money you cannot afford to lose, and the webinars are not investment advice. They are for educational purposes only. Your job is to question everything and don't be fooled. After you understand and master all the things here, trading is 80% emotional, psychological, and only 20% technical. So in order to be successful at trading, you need to have your mind and your heart in the right place. Hello Miguel. Remember, if being consistently profitable is difficult, you probably still have things to learn, and if your way is not working, why don't you try ours? Remember, 90% of traders who makes it between the 3rd and the 5th year of learning. For homeworks and or additional coaching or training or just questions, you can send your homeworks or questions to the Gmail contact, to the Skype contact, or to the LinkedIn contact. Sabatino, hi, 10 a.m. Great. Hello to Canada. That being said, everybody, let's go into the live markets and let's discuss bullish candlestick formation today. And we are going to do this on EuroCAD right now. And this is the picture from yesterday. We had traders asking Passion, can I trade retracements? Look what happened, everybody. Look what happened. If you traded the retracement, look what happened. The market broke the downtrend line, the counter trend line, and made a new higher high, right? So if you trading the retracements is a risky game for the beginner, not for the professional trader, because professional traders know how to hedge and have different systems and strategies in place. But for the beginner trader who is learning how to trade on the forex market, going against the trend, trading retracement is a risky game. Okay, I cannot tell you what to do, I cannot tell you what not to do, I can give you my opinion, right? So we're going to clean this, clean up the chart. Okay, so let's address bullish candlestick formations today. We're going to clean up the chart. So pull out, everybody, your candlestick formation cheat sheet if you can. Where is the bullish, bearish? I believe is this one. Okay, pull out your candlestick formation cheat sheet, order field. Okay, no problem. And what we are going to discuss today, what we are going to learn is how to understand the bullish candlestick formations, what is happening. Okay, so this is the bullish candlestick formation cheat sheet. You can find it on the internet, or send me an email. I'm going to email it to you. What is important for you to understand, everybody, is the body, and more important is the wick. Okay, so what you need to learn, if this is the body and if this is the wick of the candle, let's color code this in black, right? Okay, let's color code this also in black. So stroke. Okay, like this. What is the wick? The wicks are important because the wick has two stages. Okay, stages, we're going to write this down. So stages of the wick. Okay, number one is the battle between the bulls and the bears, and number two, it's the decision. Okay, who won the battle? This is what you need to understand. Lorenzo, I have a question. Considering candlesticks are time dependent candlesticks like 4 hour or days, depends on your time zone. Which time zone should I use? No sir, no, Lorenzo. You are partly right and you are partly not right. You are partly right that candlesticks are time dependent. This means that if you are trading on 1 hour chart, the candlestick needs 1 hour to close. And if you are trading on the 4 hour chart, you need 4 hours for the candle to close. And if you are trading on the daily chart, you need to wait the whole day for the candle to close. Where you are not right, Lorenzo, it doesn't matter the time zone. Okay, it's all the same. It doesn't matter. Okay, if you have the Australia time zone or Europe time zone or USD time zone, it doesn't matter. The candlestick formation is still going to need 4 hours on the 4 hour time frame, 1 hour on the 1 hour time frame. Okay, it doesn't matter on what time frame do you trade or what is your time frame of your platform. If you are trading on the 4 hour chart, yes, but they will be different. Yes, sir. Yes, they are going to be different because they different open and close, but the time is still the same. Okay. So, oh, yes, Lorenzo, I think I know what you're asking. Everybody, what Lorenzo is asking, what should be the time zone of the chart and on the platform? Well, Lorenzo, my platform time zone is GMT, okay, and my chart time zone is EET, UTC plus 2. I don't know if you can read, okay, but there is no right or wrong, Lorenzo. You cannot say, oh, it's better EET or it's better GMT or whatever. Okay, this is what I'm used, but if you ask me, Passion, why do you use UTC plus 2? I don't know. You know, it is always like this. Some chart will have different candlestick depending on the platform time zone. Yes, sir. Yes, sir. I don't have any answer for you, Lorenzo. I can show you what do I have, but I don't have any answer for you. I cannot say, oh, what is better, or GMT or EET, okay? But remember about the time, if you are on the 4 hour chart, still you need to wait for the 4 hours. Okay, but you're right, the candlestick formation are going to appear different, right? So, stages of the week, the battle between the bulls and the bears and decision, who won the battle, okay? What does this mean? This means, everybody, that this bullish candle, and let's color code in white, that this bullish candle before it closed like this could be like this. It started bullish, then it went red because the market, the bulls and the bears were fighting, right? Okay, it's the same candle that I'm showing you. So this would be the fight between the bulls and the bears. So when the candle leaves a wick, it means so the same candle could start like this. Okay, it's the same candle, could start like this, and it could end like this. Could end like this. Okay, so what does this mean, could end like this? It means that when you are trading, everybody, you need to wait for the candle to close, because if you are entering the market here when the bulls and bears are fighting, right, and you think, oh, it's a bearish candle, the market is falling, wait a second, wait a minute, wait an hour, because what started like this could end like this. So what happened? The bulls and the bears fought for control, and what was the decision? The decision was that the bulls won, because the market, right, the price was down, but then between the battle it closed in here. So when you are trading bullish candlestick formations, be aware of the long wicks. Okay, this is very important. And if you can check the bullish candlestick formation cheat sheet, as you can see, the bullish shooting star, right, you have the long wick, and you have the, if you want, buy at the opening price of the next candle. So the long wick symbolizes that the bulls and the bears fought for control and the bulls won. Now, what about the bullish morning star? It's quite similar, right? Bullish morning star, and don't bother with the names. So sometimes you are going to have a falling candle. Let's color code this in red. Okay, sometimes the candle is going to have a wick, it doesn't matter, not this one, could be the wick from the downside up, right? So this is a bearish candle, it's red or black or whatever, and in between, in here, you have something called indecision candle. Okay, the indecision candle is where the candle has more or less the same wicks from the upside down and downside up, and the next is going to be, remember, the bulls and the bears are fighting for control, but the next candle is going to be a bullish candle, right? So you have bears power, right? You have indecision because of the wicks. You have the upper wick and the lower wick with the same value, same amount, right? What did we say? We said stages of the wick. Number one, battle between the bulls and the bears, and number two is decision. So in this example, who won? Who won in here? Nobody won. Why? This is why this candle is called an indecision candle, and we are not going to spend a lot of time talking about dojis and butterfly dojis and whatever. We are going to just cover the basics, what are the basics that are important for the beginner trader. But what you need to learn is how to interpret the wicks. Okay, and of course you have a bearish candle, you have the indecision candle, it doesn't matter what color, white or red, in between, still indecision candle. And next is the bullish candle. So what happened? We went down, we went sideways, and we went up. And this is how a bullish candlestick formation is formed. It's just an example. There are different variations on bullish and bearish candlestick formations. But this is an indication that bears were fighting, there were indecision, and the bulls won, right? So this would be this one, and let me check. Bullish engulfing, it's easy. Okay, the bullish piercing line, the bullish tweezer bottom, it's easy, right? You have 2 wicks, 2 long wicks, but the bullish piercing line could be an interesting one, a tricky one, right? So let's put this by side, right? So you have a bearish candle, number one, and as soon as possible by its side you have a bullish candle, minimum 70%. So this is the rule, right? So this signals what? That the bears were in control, but then bulls took control over. Okay? Not so difficult, I think. Okay? So those, yes, we have many more bullish and bearish, but those are the one I think that are happening most of the time, right? The bullish piercing line, oh, it's at 60%. Okay, if you don't remember the bullish and candlestick and bearish candlestick formation, just print out the cheat sheet, put it near your trading station, and when you trade, just take a look. Okay, they are on internet, they are free, no problem. Now those are the bullish candlestick formations, and we talked about yesterday, don't panic, right? We're going to clean up this, clean up. Don't panic when the market is going to retest the bullish or bearish candlestick formation. So this is EuroCAD daily chart, 1 hour chart, and this is the daily chart, right? And we spotted the trading opportunity on EuroCAD to go long so far. Remember, this week is full of news, so adjust your risk, everybody. Don't just enter trades blindly, because this market could reverse. Okay, we have 2 news announcements out of Canada. One is tomorrow, it depends where do you live, and the other one is on Friday. Okay, but technically speaking, what do we have here? We have the counter trend line break, right? And this is the daily chart. Forget, I'm going to erase the indicators. We didn't learn indicators yet, right? So we have here what happened? We have here the bullish piercing line, the white candle closed minimum 60%, right? And then we have the bullish engulfing candle here, daily chart. Okay, what is challenging to the beginner trader is you entered here, everybody. This is the area where we entered, and we panicked, right? We panicked because as soon as we entered, what happened? The market retested. So the market retested until here. The market retested our entry. But if you have your stop loss right, you should be safe. Okay? So this is the daily chart, and we know that the higher time frame controls the smaller time frame. So we entered on the 1 hour chart. So the bullish engulfing candle on the daily chart is the bullish engulfing candle on the 1 hour chart in here. Okay, let's say that we missed this opportunity and we are waiting for the next one, right? What we were waiting for? We were waiting for the counter trend line break, which happened in here, right? And as you can see, we have here tweezer bottoms, we have here tweezer bottoms, right? The cheat sheet is theory, the live market is a little bit different, but not a problem, it's not a problem. So we have one bullish, second bullish, we have another, I'm not sure about this one, but we have here, this is the another bullish candlestick formation, right? And we entered here, right? We had a counter trend and break. This was the end of the, we need to wait, everybody, we need to wait for the candle to close. So we entered here, this was our entry after the counter trend line break. And as you can see, the market is testing right now, the market is going against us. When this happens, don't panic, don't, oh, the market is almost at my stop loss. And this is what you need to learn, where to put your stop loss. So not always, everybody, even though there is no right or wrong, the best stop loss, it's not always in here. Oh, but I read the book and I was watching a seminar and a webinar, and my trading coach said that I should put my stop loss below the bullish candlestick formation. Well, yes, you can, but this stop loss, it's not always the best. This is not always the best stop loss, right? I mean, we talked about if you want to be safe, right? If you want to learn something today, listen to this, everybody. If this is structure, right? If this is structure, I'm going to show you in the live market. If this is structure, and if this is the up trend line, right? And I'm entering the market, I'm buying bullish candlestick formation. I bought a bullish candlestick formation here, right? I bought a bullish candlestick formation here. I bought a bullish candlestick formation in here. And I bought my bullish candlestick formation in here. I'm going to adjust the trend line. And I bought my bullish candlestick formation in here. Let's say that I entered the market. Let's say that I entered the market. This is going to be black, the trend line. Let's say that I entered the market 1, 2, 3, 4, 5 times, right? And this is structure. This is not just a short-term trend. This is structure. I entered the market buying bullish candlestick formations 5 times. Number 1, I was wrong. Number 2, I was wrong. The market went against me. Number 3, I was wrong. Number 4, I was wrong. And I bought number 5. What do you think, everybody? If I put my stop loss always for all the 5 candlestick formations, if I put my stop loss below the structure low, should I or shouldn't I be safe? Even though I'm wrong, I think the market is going to rally, I think the market is going to rally, I think the market is going to rally. Even though I'm wrong on number 1, I thought the market is going to rally. I was wrong on entry number 2 because I thought the market is going to rally. I was wrong on entry number 3. I was wrong. I remember this, everybody. I wasn't wrong about direction. I was wrong about the timing, right? Like in here. I'm not wrong about direction because the daily chart from EuroCAD is showing me that we are near the uptrend line and the market is making higher highs, higher lows on the daily, right? So I'm not wrong about the direction. The direction is up so far. So even though I entered here and the market is testing my entry, doesn't mean that I'm wrong about direction. Maybe I'm wrong about the timing, right? But what is important and what I want you to understand, if you have your stop loss in the right place, most likely you have an 80 to 90% chance that the market is going to find the significant low and then is going to push up, is going to perform a structure high. Okay, and why is this important? Well, the market must, it's a must, the market, in order to wave, it must make a high. Below the previous structure low, it should be safe. Yes, sir. Yes, sir. Yes, sir. So even though you are buying bullish candlestick formations in the wrong place, okay, I mean, this shouldn't be your objective, everybody. We talked yesterday, you should buy bullish candlestick formations in retracements when the retracement is over, right? So you need to be also careful. Don't just buy in here, you know. I was buying the end of the retracement, so the market was falling down and I bought a counter trendline break in this example. I didn't just bought my bullish candlestick formations blindly. I was waiting, every time I was waiting for the counter trendline break, and then I bought the bullish candlestick formation, but I was wrong, my timing was wrong, so the market went against me. Okay, so I bought in here, counter trendline break, the market fall, counter trendline break, the market fall, bought the counter trendline break, the market fall. I was wrong 4 times. I wasn't wrong about the bias, the direction, I was wrong about my timing. But if I had my stop loss in the right place, I would be safe. And there are no guarantees, everybody. Remember, the market can do anything it wants when it wants, right? But if you are going to analyze structure, 8, 9 times out of 10, you are safe if you can put your stop loss below the structure low. Okay, now also you need to address your risk. So if you are trading on the monthly chart or weekly or daily and the first entry would represent 50% of your account, of course this would be a stupid thing to do, right? Oh, Passion, but you said that the safest place. Yes, I'm saying, and I'm repeating, the safest place is the structure low. But if you are going to risk 50%, you know, well, this is not intelligent, you know. Okay, so you should risk, everybody, 1%, 2%, half percent, whatever, of your trading capital, right? And some of you are typing right now, oh, but I don't have enough money. Well, this is where trading is challenging, right? Where should I enter? Should I enter right now on trade number 1? Well, maybe yes, maybe no, right? This is where we are repeating you, there is no right or wrong. There is no right or wrong. If you entered, let's write this down, trade number 1. This is the trade number 1, okay? If you don't have enough money in your account to put your stop loss in the safe place, and you need to decide, right? So if you are going to risk more than 2%, you are doing a money management mistake. If you ask me, this is my suggestion. Okay, and of course, let's say that trade number 1 was a winner, right? Most likely you are going to get stressed, you know, because you are, oh man, I should take this trade, I knew, you know, the self-talk we have, right, in our heads. I knew, man, that this trade is going to be a winner, and I didn't enter because FXPassion said that I shouldn't enter. You know, what the hell, I'm going to enter next time. Right? Yes, I've been there, everybody. I thought like this also. And what happened? I entered the next opportunity come along, and I entered the trade number 1. What happened? You guess it right. The market went against me. And I was risking 20% of my trade. So I re-entered on trade number 2. Right? Because I knew that the market would go up, right? And what happened? The market went against me. I was risking 50-60% on my account, and I was so angry because I knew that I was right, you know. Oh, this market is going to go up. I entered on trade number 3, right? And the market did what? The market went against me again, and I burned my account on trade number 4 because I didn't listen to the money management rules, everybody. Okay, so we have a saying in trading, rule, it's, you need to integrate this psychological rule, it's better to be out of a trade and wishing to be in than being in a trade and wishing to be out. This is a psychological rule for the beginner trader. Psychological rule, right? It's better to be out of a trade and wishing to be in than being in a trade and wishing to be out. So if you are a beginner trader, everybody, and if you want to become a professional trader, I'm telling you, professional traders address risk first. So if you're a beginner trader and you want to take the opportunity number 1 and you don't have enough capital, you have 2 ways. Number 1, stay out of the market, because you know that the safest stop loss is down here, but you don't have enough money in your account. Stay out of the market, or as we said, put your stop loss 15 pips above or below your candlestick formation. But you need to address the risk. So if you are going to trade the example number 1, trade number 1, and if you are going to lose, don't get angry, okay? Don't get pissed off and don't shoot your computer and don't get angry at yourself and everybody, because sometimes, you know, the market is going to retest the candlestick formations, and the most important, you knew that the safest place was the structure low, right? Okay? But what are the rules of trading the bullish candlestick formations? You need to buy the bullish candlestick formation if you want, of course, with the counter trendline break and when the retracement is over. Okay, so let's check EuroCAD daily chart. I'm going to compress the chart. Now I'm going to show you in the live markets what do we mean by structure. And let's go on the weekly. Okay, just to show you, this is now EuroCAD weekly chart. So we have the uptrend line in here. Let's color code this in black. And structure is this, everybody. Structure low, structure high, structure low, structure high, structure low, structure high, just maybe structure low. It's not confirmed yet. Okay, but let's do it like this, it's better. Right? So this is structure right now. And we are going to move this structure on the daily chart for you to see. Okay, this is now the same structure on the daily chart. So, and these concepts work on all time frames, everybody, on all time frames, right? So talking from the daily perspective, even you entered buying bullish candlestick formations in the wrong place at the wrong time, if you put your stop loss down here, you should be safe, right? Because this is structure. The market should continue working its way to a higher high, right? So let's check where are the, and we don't have the crystal ball. In some point in time this was the market, right? In some point in time this was the market. And let's see. So this is the daily chart. This was the retracement, right? This was the retracement. And what do we have here? Well, I could buy these tweezer bottoms or this bullish engulfing candle. So this could be trade number one for me, right? Trade number one. Let's see what happened. The market went against me, fall further down, right? And fall further down. It was retracing, still retracing, still retracing. And I have another counter trendline break in here. Bullish piercing line, everybody. Bullish piercing line. I could enter bullish piercing line, or this is also a bullish candlestick formation in here. See, bears candle, undecision candle, bulls candle. We talked to explain why the wicks are important. This one. Hello Paul, how are you? So I could enter here, right? And let's see what happened. The market went, okay, the market went up, I was gaining, I was happy with the second trade, right? Now it depends also how you manage your trade, but let's see. The market went, let's say that I was sleeping for 5 weeks, a month, and the market went against me again. So this was my second trade, right? The market went against me again. I re-entered on the next counter trendline break, right? And the market fall against me again. Long story short, everybody, if I have my stop loss, in a safe place, which is the structure low, right? Which is the structure low. Look what would happen. The market would find its relevant low, and from making lower lows, lower highs, lower lows, lower highs, which was the trend changed, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And I would won on my third trade, on my second trade, and I would almost get to break even with my first trade, right? If I would put my stop loss in a safe place, out of the short-term trends. If you want, okay, there's no right or wrong. If you want, I would be safe. Now, Passion, you are saying that it's wrong to put your stop loss below the candlestick formation. No, no sir, I am not saying this. No sir, no sir. I'm just saying that you put your stop loss below the most recent lower high, below the candlestick formation that you're entering. If you enter at the wrong time, the market is going to stop you out. Wrong timing here, wrong timing, bullish candlestick formation, wrong timing, right? Bullish candlestick formation, wrong timing, maybe if I didn't manage my trade, right? But this is not wrong, everybody. What I want you to understand as a beginner trader is that if you put your stop loss above or below the structure highs and lows, even though if you are wrong, you are entering at the wrong time, you should be safe. And there are no guarantees, of course. As like we said in theory, right? I entered trader number 1 at the wrong time, then I entered trader number 2 at the wrong time, and trade number 3 at the wrong time. Sooner or later, if the structure is going to continue, the market must make a new higher high. And if we go further back in time, look in here, everybody. Look in here. So this is the low and this is the high, okay? And it's just an example. Even though I'm wrong buying the bullish candlestick formation in here, I'm wrong buying bullish candlestick formations in here, I'm wrong, my timing is wrong, I'm wrong buying bullish candlestick formation in here, I bought for the 4th time, I bought for the 5th time, I was wrong, the market's still against me. I bought for the 6th, 7th time, right? I was wrong, not my bias, because structure is up. My bias is not wrong, but I entered at the wrong time, right? But if I put my stop loss below the structure low, what happened, everybody? What happened? See what happened? The trend was a downtrend with a false breakout, and then the trend reversed from a downtrend to an uptrend, making higher highs, higher lows. And I would won just because I put my stop loss in the right place. Okay? Now, for the trader who is asking, is it wrong? It's not wrong to put your stop loss. I mean, it's the other way around. If you don't have enough money in your account, if you don't have enough capital, you must put your stop loss above or below, 15 pips above, 15 pips below your candlestick formation, right? So I would lost my trade 1, 2, 3, 4, 5, 6, 7 times. Not 7, 6, right? Because then the market reversed. And then, so if I'm a beginner and I don't understand the trends, right? I don't know how properly identify the trend. I don't know how properly identify the structure. I would lose I would lose 6 times. I lost 6 times, I was wrong, right? But starting from here, and this is going to be green, right? I won the first one buying the bullish candlestick formation. I would won the first one, the second one, I would won the third, right? I would won the fifth, I would won the sixth, if I would enter with the retracement 7. So now I'm in profit, right? I lost 6 times, but I won 7 times. Green, 1, 2, 3, 4, 5, 6. I need some more, right? Here, 7, if you want, 8, right? So there is no right or wrong. It's just that if you put your stop loss below your candlestick formation, you are going to work hard, you know. Nothing wrong. No, nothing wrong with working hard, but what I wanted to learn is that if you can, okay, we are on the daily chart, but if you can spot the structure on 1 hour chart, and if you can put your stop loss above or below the structure high and low. So talking about trading, EuroCAD 1 hour chart, EuroCAD 1 hour chart. This is the 1 hour chart, and we are going to clean a little bit. Clean up, clean up, clean up, clean up, clean up. Right? So this was the downtrend from the daily, right? And the market broke the downtrend line. This is the uptrend line, the black one, right? So we are going to identify structure. Structure low, structure high, structure low, structure high. Everybody, if you can 10 pips, 15 pips below the uptrend line, 80% to 90% chance your trades are going to be safe. It doesn't matter what is going to happen in here because of the news announcements and everything. This is structure, right? So if you can put your stop loss, put your stop loss 1.4911111. This is the stop loss, okay? So don't risk 50% of your account. The rest risk how to properly manage the trade, how to properly make a plan, right? So if I'm in a trade, right, I enter this counter trendline break. I enter this counter trendline break in here, or I entered my counter trendline break in here. If for the second one I'm still wrong, they are not wrong, but I am in a way of the natural movement of the market. Just maybe, I don't know, we don't have the crystal ball, but what I know, technically speaking, that I'm much safer, my stop loss is in a much safer place down here. Do we agree on that, everybody? Is anybody in the webinar who does not agree, who has a question or a comment? Do we agree on this, everybody? What do you think, Teacher Miguel, Teacher Paul, Lorenzo, what do you think? See? This is the 1 hour candle right now. We talked about the phases of the week. This candle was bearish a few seconds ago, and right now bulls are fighting back. This is a live chart, yes. Eddington says no brainer, agree. Well, it's a no-brainer for you, but maybe not a no-brainer for the beginner trader. It was not a no-brainer for me when I was learning how to trade. But I know everyone is thinking, wow, that is a big stop loss. It's not a big stop loss, right, Miguel? This stop loss could be 1%, right? Make stop loss and big stop loss, right? The big stop loss is not equal to a big risk, everybody. You need to learn this stuff. Okay, is this a big stop loss? Yes, absolutely. But is this a big risk? No, it's not. A big stop loss does not equal a big risk. So this stop loss, right, Miguel? Risk 1%, 1% if you want, 2% if you want. If you ask me, this should be a risk. Miguel says fully, great. Miguel, remember, tomorrow you are going to teach me what we have learned. Okay, you are going to teach me about the risk. Passion, if you are looking for a 1-2 risk reward, where does that put your take profit? Well, let's clone and let's see graphically. Graphically, this is 1 and clone. Graphically, take profit Eddington would be at 1.54556. So this is the take profit equals 1.54556. This is the take profit. In terms of the overall chart and the resistance, Eddington says, well, this is the take profit, right? If we are going to risk 1, we need to go after 2. So let's go on the daily chart. We're going to move from the 1 hour to the daily. So this is the take profit level, right? Nothing special if you ask me, Eddington. Nothing special. This market could not have any problems reaching this profit. Because structurally speaking, everybody, remember, structure is up, right? Structure low, structure high, structure low, structure high, structure low, structure high. So what do we need? We need a new structure high. When the market is going to perform or close a new structure high, this in here is going to become structure low, right? So let's go back on the 1 hour chart. Totally doable, agree, no problem, yes sir. Okay everybody, did you learn anything today? Did you learn anything today about the psychological rule and buying bullish candlestick formations and how to understand the wicks, the battle between the bulls and the bears and the decisions? Okay, our time is up, everybody. re-watch these webinars from yesterday if you can. Write down the rules of trading, don't just enter. Oh, I'm going to buy because FXPassion said that there is not a problem. There is not a problem if you put your stop loss above or below the structure, not risking more than 1 to 2%. Otherwise, the answer is yes. We are going to have problems trading that way. Maxine, how are you? Thank you, no problem, we are here for you. Okay everybody, stay strong and trade with passion. This is FXPassion signing off.